Welcome back to Investing Talk Podcast. We're the show that takes your questions, digs into the research, and helps you cut through the noise to get to what really matters. Our mission is to help you feel genuinely informed without feeling, totally overwhelmed. Today, we're tackling a question from one of you. Is Bitmine Immersion Technologies a good time to buy now? It's a really interesting one, actually. It's not a simple yes or no, is it? This company is right in the middle of the fast-moving world of digital assets. We've sifted through the analyses, the financials, the market buzz.
Yeah, we've pulled together a pretty comprehensive investment analysis. We're looking at everything, its financial state, the technical chart signals, all of it. Our aim today is really to help you understand what's actually going on behind those big headlines and, frankly, some pretty wild price swings.
Absolutely. Yeah. Before we dive in, though, just a quick reminder, if you find these discussions helpful, please do consider subscribing, maybe liking the video, and leaving a comment. It honestly helps us a lot. And if there's a specific company you're curious about, just drop its name in the comments below. We're always looking for ideas. Oh, and if you're feeling generous, maybe consider buying us a coffee. It genuinely fuels these research sessions. Okay, let's get into it. Bitmine Immersion Technologies. It's definitely been making waves. So the big question is, what is this company today, really? And is it, a smart place to put your money right now?
Well, what's really striking here is just how quickly Bitmine is changing. It's in this period of really rapid transition. Historically, they were, a crypto miner, focused on Bitcoin, Ethereum, the usual suspects, doing the actual computational work. But around mid-2025, they completely pivoted. They've shifted to what people are calling an Ethereum-focused crypto treasury model.
So less about the hard work of mining and more just holding onto a big pile of crypto. Almost like a digital vault or a fund, but traded on the stock market.
Exactly, you've nailed it. Instead of running servers constantly, they're basically accumulating and holding digital assets. And the numbers, based on the public data we looked at, are pretty impressive on the surface. Around 625,000 ETH, that's Ethereum. At recent prices, that's over, $2.35 billion, plus about 192 Bitcoin, and just over $400 million in cash they can access easily. Looks great on paper.
Wow. Yeah, that does sound like a massive amount of assets. 2.35 billion in ETH alone. But okay, looking past that big asset number, what about the actual business, the operations? Are they making money in the, traditional sense?
And that's where it gets
complicated. That's the crucial question, really. Despite that huge asset list, the analysis we reviewed actually described their operating performance and financial condition as, and I quote, very weak. There's just very little sign of sustainable profit margins or, strong, consistent cash flow coming from the business itself. We're not seeing regular profits, and there's no real guidance on future earnings either. So the core business operations, they just don't seem to justify the current market value, not in a conventional way.
Okay, so that's a real disconnect, isn't it? Billions in assets on one side, very weak operations on the other. So my question is, how do they get all that cash in crypto if the main business isn't generating it? Where did it come from? Right, good question. Well, a huge piece of the puzzle was a recent $250 million private placement. That's where they sell shares directly to bigger investors, institutions, maybe wealthy individuals not in the open market. That injected a lot of cash, shored up the reserves, and let them buy even more Ethereum. And that strategy is what really helped their market cap explode. It went from under $40 million to over $4.5 billion. In just 1 year, that kind of jump is, it's staggering.
Okay, hold on. 40 million to 4.5 billion in a year. That is absolutely eye-watering growth. But, and this is a big but, when that growth is basically built on holding massive amounts of crypto, my internal alarm bells start ringing pretty loudly. What are the risks here? What's lurking underneath all those billions in digital assets?
Yeah, you're right to be cautious. If we connect the dots, while they report all this cash in crypto, the strategy itself makes their balance sheet incredibly vulnerable to crypto price swings. I mean, think about it. If Ethereum's price tanks, the value of their main asset tanks right along with it, instantly impacts their reported worth. The analysis also highlighted a lack of clarity around their long-term debt and, traditional measures of financial health like solvency ratios. We just don't have a clear picture there. So while cash flow looked good temporarily because of that fundraising.
Right, the private placement.
Exactly. It's heavily dependent on crypto prices staying stable or rising. If ETH or Bitcoin take a serious tumble, there are real questions about liquidity and solvency. They don't have strong operational profits to fall back on.
So essentially, it's a company whose value is almost entirely tied to crypto prices, with shaky fundamentals underneath. It feels less like investing in a business and more like a leveraged bet on Ethereum, maybe. Am I oversimplifying that?
No, I don't think you are. That's a pretty fair assessment. It really is more of an asset play than a traditional operating company right now.
Okay, what about their position in the market? Is this whole crypto treasury thing unique, or are others doing it too?
Well, their edge, for now at least, is being one of the first publicly traded companies to really brand itself this way, as a sort of regulated proxy for holding crypto, especially Ethereum. They also mention low-cost bases in Texas and Trinidad, which might have mattered more for mining, less relevant now, perhaps. But it's important to remember, this strategy is new. It's largely untested in the long run. We don't know how sustainable it is. And as they move away from mining, they're suddenly competing not just with other miners, but also with established crypto funds, maybe even ETFs that track crypto prices. It's a different ballgame.
And what about the shareholders in all this? Are they getting clear returns from this strategy?
That's another slightly murky area. The analysis pointed out that their stock buyback program kind of blurs the lines, between the strategy of accumulating ETH and actually delivering value back to the people who own the stock. Think about it. If they're using company money, maybe from that placement, to buy back their own shares at a price that's higher than the actual value of the crypto they hold per share, well, questions arise.
Right, paying a premium for their own stock.
Exactly. Some might see that as trying to boost the share price rather than focusing on the underlying value. It suggests maybe a focus on market perception over fundamental return for shareholders.
Okay, this model is definitely different. So how on earth do you value a company like this? Can we even use the standard tools, PE ratios, price to sales?
Yeah, that's a major challenge. We're kind of in uncharted waters valuation-wise. Those traditional metrics investors rely on PE, PS, price to book. They're either not really available or they're incredibly inconsistent here. It's mainly because their earnings are all over the place, often negative, and because they've shifted so dramatically away from normal operations. So using standard financial models to compare them is really, really difficult. It's like comparing apples and, well, something completely different.
Okay, so if the classic tools don't work, what is driving the stock price? And we have to talk about that price action. It's been insane. Right.
Oh, completely insane. What seems to be driving the value is mostly market speculation, hype, and that direct link to Ethereum's price. We saw the stock price shoot up from around $4.50 to a peak of, what was it, 135 or 136 cents after they announced the crypto strategy. Just an unbelievable run.
Yeah.
But then, almost as quickly, it crashed, right back down into the $30 to $40 range. That kind of move screams extreme overvaluation, probably fueled by speculative money pouring in, followed by very aggressive profit-taking by early movers. The price when this analysis was done, around $41.28 back on August 7th, 2025, still represented a pretty big premium compared to the actual net asset value, the underlying worth of their crypto holdings per share. Even with that buyback plan they announced, supposedly targeting shares below NAV. The volatility just shows this huge gap between book value, asset value, and what the market thinks it's worth day to day.
Yeah, $4.50 to $135 and back down. That's not investing. That's a pure roller coaster.
Yeah.
So for listeners who maybe look at charts, the technical traders, what are the technicals telling us? Where might this be heading?
It is absolutely a roller coaster, yeah. Needs a strong stomach. The recent price action is just incredibly volatile. Remember, it dropped over 70% from that peak. Now it seems to be trying to find a base, sort of consolidating in that $30 to $50 range. Looking at the charts, there seems to be immediate support around $32.66. That lines up with the key long-term moving average. Resistance where the price might hit a ceiling looks to be around $40.74, which is a shorter-term moving average. Interestingly, stockinvest.us, which does technical analysis, noted negative short-term signals, but a general buy signal based on longer-term averages.
So mixed signals then.
Exactly. It creates technical ambiguity. For traders, that means it's a high-risk setup. The charts aren't giving a clear direction.
Are there any more specific indicators giving clearer signals, like MCD or anything?
Yes, actually. The MESID, that's the moving average convergence divergence, a momentum indicator. It was signaling a sell when this analysis was done. That's significant. It suggests downward momentum might be building, which is a warning sign, especially for short-term plays. Now, the short-term moving average is technically above the long-term one, which some see as a weak buy signal. But the heavy volatility in those recent negative signals probably outweigh that. One interesting point, trading volume has been decreasing as the price fell. Usually that lessens the risk of a sudden sharp crash because there isn't huge selling pressure.
Okay.
But, it definitely doesn't rule out more downside. It just means less conviction, perhaps, on the sell side, but also maybe less conviction on any potential bounce back.
Right. Got it. Okay, moving beyond the numbers and charts for a sec, what's the big news been around Bitmine lately? What's driving the narrative?
Well, the main headlines have really been about those three key things we've touched on. First, that big strategic shift to accumulating Ethereum. That was huge news. Second, the $250 million private placement that funded a lot of it. And third, that massive $1 billion share buyback program they announced. That definitely got attention, even if we have questions about its real impact on shareholder value.
Okay. And what about the professional analysts, the ones who cover the stock? Is there any kind of consensus view?
The consensus at the time of the analysis was actually leaning towards a moderate buy. The average price target was around $60.
$60. So projecting significant upside from where it was trading.
Yeah, quite a bit. But, and this is a big caveat from the analysis we read, that consensus is based on a very small number of analysts. And perhaps more importantly, it's quite likely outdated. Given how fast the company changed its model and how wild the price swings have been, analysis from even a few weeks prior might not be relevant anymore. Things move fast here.
That's a really good point. Things change so quickly. What about insiders? Are executives or board members buying or selling shares? And what's the general vibe on, say, social media or forums?
Well, regarding insider activity, there hasn't been much significant buying or selling reported since they made this big strategy shift. Sometimes that lack of activity is seen as neutral, not particularly bullish or bearish. As for social media and blogs, the sentiment seems pretty mixed, kind of neutral overall. You saw that initial huge excitement during the run-up, right? But that seems to be balanced now by quite a bit of skepticism, people questioning if this treasury model can really last, and pointing out those disconnects we talked about. A lot of wait and see.
Okay. So looking ahead, what are the potential triggers, short-term things that could move the stock price?
Short term, a few things stand out. Actually, executing that $1 billion buyback could lend some support to the price if and when they do it. Any announcements of further big Ethereum purchases might also give it a temporary boost, appealing to those betting on ETH. And, crucially, their quarterly and annual reports. When they update the market on the exact size and current value of their crypto holdings, expect sharp moves. The market will react instantly to that NAV update. And of course, any major swing in the price of Ethereum or Bitcoin itself will hit Bitmine directly and immediately because they're so heavily concentrated in those assets.
Right, they're basically tied to the hip of ETH's price. And longer term, what's the big question mark?
Long term. The biggest question, hands down, is just the basic viability of this whole ETH treasury model for a public company. Can it actually work sustainably through the ups and downs of both the crypto market and the broader financial markets? It's new, it's novel, we just don't have the track record. Then there's regulation, any potential new rules around how companies can hold digital assets that could dramatically change things for them, new taxes, capital requirements, who knows?
Yeah, regulatory risk is huge in crypto.
Definitely. And then there's always some background chatter, purely speculative, about potential mergers or acquisitions, maybe larger players looking to scoop up digital asset infrastructure, but that's just speculation for now.
Okay, so let's bring it all together. Back to that original question from our listener. Is Bitmine Immersion Technologies a good time to buy now? After looking at all this, the assets, the weak operations, the volatility, the strategy shift, what's the verdict?
Well, the overall rating from the analysis we reviewed was pretty low, a 3 out of 10, and the reasoning is fairly straightforward. Yes, Bitmine delivered absolutely explosive returns over the past year. Those huge gains were real. But that performance was driven almost entirely by taking on massive crypto risk, riding a wave of speculation, and making that one big strategic change. It wasn't built on solid business fundamentals.
So not supported by a sustainable profit-generating core business then. It really does sound more like speculation than investment.
Precisely. That's the key takeaway. Its current valuation just isn't backed by consistent earnings or a strong underlying business. Instead, the whole model is leveraged to Ethereum's price. Its fate rises and falls with the crypto market. Add to that the unstable technicals, the extreme volatility we saw, and the general uncertainty about where management is really taking this long term. It all adds up to a significantly higher chance of losing capital compared to more traditional investments.
Okay. Is there any potential upside case, maybe for specific types of investors, or is it just too risky across the board?
Look, there's definitely upside potential if Ethereum goes on another major bull run. If ETH prices soar, Bitmine's asset value will soar too, and the stock likely follows. But the analysis concludes that the overall balance of risk versus reward just isn't favorable right now, not for most people. It's seen as unfavorable for short-term traders because of the sheer unpredictability and volatility. And it's unfavorable for long-term investors because of those big strategic question marks, the regulatory risks, and the lack of fundamental business strength. The conclusion was really that it's only suitable for very high-risk, purely speculative trading, and even then you'd need to be extremely careful.
Right. And for those traders, the ones with a very high tolerance for risk who might still consider it, did the analysis suggest any specific entry or exit levels?
It did offer some potential levels, but again, strictly for high-risk speculation. The suggested entry zone was around $32 to $34. That's closer to that long-term moving average support level we mentioned. But crucially, it recommended a very tight stop-loss order at $28. That's just below key support, designed to cut losses quickly if it breaks down further. And for taking profits on such a speculative trade, the target range suggested was $50 to $60. That aligns with some technical resistance levels and that perhaps optimistic analyst target price. But again, high-risk trading only.
Wow. Okay. This look at Bitmine Immersion Technologies really underscores how important it is to dig deeper than the headlines, doesn't it? Especially in these newer, more volatile sectors. You have to understand the strategy, the real financial picture, and all the risks involved.
It definitely does. And it brings up a fascinating question for anyone investing in this space, really. At what point does a company just holding assets become its main business? And how do we even begin to value that properly, especially when the assets themselves are as volatile as crypto?
That's definitely something to think about as you consider your own investment decisions. Thank you for joining us for this analysis today. We really hope it's giving you a clearer, more balanced view of Bitmine Immersion Technologies.
Absolutely. Always remember, information is powerful, but understanding and applying it carefully is what truly counts, especially with complex investments like this. Until next time.
See you on the next Investing Talk podcast.